Welcome back, and joining us on the show now is Kunal Shah from Nirmal. Kunal, hi, thank you so much for joining in. It's a strong day when it comes to gold and silver, both of those commodities. We're trading at record highs here. What is your sense on where the prices could be by the end of this year, starting with gold first?
Whatever has been happening in gold is quite interesting, mainly on account of what we are seeing is the sharp expectation building that you will see a sharp rate cuts in next 2-3 months, maybe a perhaps 100 bips rate cut by the US, or even more aggressive than that. That is building in the price. Second is the geopolitical standoff between US, India, and the way entire BRICS and the Western economies are decoupling right now. And that is sparking further geopolitical worries amongst the global investors, that how this tariff and the global geopolitical tension would translate into the growth. And that is something worrisome for most of the money managers. So I think there is a shift taking place, the diversification into gold. If you look at the central banks, even at these rates, we are seeing some buying coming in. So net, it looks that gold is heading towards $3650, $3700. So the target is definitely on the upside. And the way things are shaped right now, there is no major option left but to invest in the precious metals, and that sounds quite safe haven and likely to do better. So you have upgraded. I was of the view that 3550 was the expected to be the top for this year. Now we are upgrading that to $3700.
3,700 for the international markets. What would that really mean for the Indian markets, where we've seen rupee continue to depreciate, the worst performing Asian currency that we've seen in the previous quarter as well? So from here on, with the kind of rupee depreciation, how does the Indian market calculation work like?
That should translate into somewhere between 1,08,000 to 1,09,000 rupees on Indian basis. And we don't know what is going to happen with the tariff, whether US is going to cut back another 25% duty which has been levied, or whether it's going to continue. All this is, big questions to determine the outlook of Indian rupee. But we expect if there is any positive news on the tariff front, I think rupee will sharply appreciate, because I think the major reason why rupee has depreciated is because of the US tariff. So let's keep our fingers crossed and expect some positive outcome. I think the maximum upside till then for the Indian rupee would be somewhere at 89. 89 should be the peak out point for the Indian rupee. And on the downside, we can see 86.50, 86, those kind of level would be the support.
Kunal, also come in on silver prices, because apart from the safe haven buying, silver also is about a deficiency this year. We also are looking at very strong industrial demand from China, from much of Asia as well. With 40 done, inching very close to $41 an ounce right now. What is your sense on where silver could be by the end of this year?
Well, silver, the story is not just demand, it's a supply-driven story. I've mentioned before in your show that a lot of the silver mines, top 3 mines in Mexico, which produces 25% of the global silver, those mines are likely to get exhausted by next year, or perhaps even in 2027. So this is a structural story where the supply side is shrinking and the demand side is growing quite rapidly. So we've seen a news where US has added silver into the critical mineral imports. So now looking at the way the data centers in the US, the way they are expanding, the way it is consuming the power and everything, silver they have added into a critical mineral list. So it means that the sovereign government of the US will be forced to procure silver. So I think at a time where the supply is shrinking, the deficits are growing, and the demand projections are increasing. So here, there is no point in predicting how much it can go up. It is going to go up quite sharply. I would say by the end of the year, by December, 1,35,000, 1,40,000, $45 on COMEX looks very much achievable, and it can really outpace my forecast and go up quite sharply. So be long in this commodity. If you see any decline, use those declines for the buying opportunity, and the outlook on silver is quite bullish.
So, Kunal, if you had like 100 rupees, and how would you divide it between gold and silver?
I would put 70 rupees in silver and 30 rupees in gold.
How are you also looking at the buying opportunities when it comes to India? We do understand that the investment is on the stronger side, not so much for retail or jewelry for that matter. And are these levels good to buy, even if for a fresh buyer?
I would say if you're buying, if you're not bought, and if you are buying from the investment point of view, keep a room to buy, because silver, we all know it's a very high beta commodity. If it comes down, it doesn't take time for it to come down by 5,000 rupees, 10,000 rupees. So whenever it comes down, you have a room to average. And I think one can remain long. 1,23,000, 24,000, they can buy it. I think it is going to go up. So my target for this year was 1,25,000. Even though the target is achieved, I would still recommend to buy, considering all the new development taking place. We've seen a small quantity bought by Saudi Arabia, Russia saying that they want to add silver in their strategic reserve. US is saying that we are adding this into a critical mineral as a commodity, like the way they are treating uranium, the same way they are going to treat silver. All these are indication that the more is likely to come as far as the upside is concerned. So I would recommend to go long, and I would keep, if I want to buy 100 grams, I would buy 50 grams right now, wait for a dip and buy the remaining 50 at the dip.
All right, that point is well taken. So if he had 100 rupees, he's going to buy 70 silver and 30 gold.
That's interesting, Manisha, because for 100 rupees at these prices, all you're going to get is Priya gold and some other silver, not the real gold and the silver itself. But be that as it may, what we'll do is take a short break, come back, get you more on the markets and stock-specific action. Stay with us.